Guys talk about, well, if we revalue gold to equal all of the currency out there, everything will be fine. Well, it won't, because there's more debt than there is units of currencies. And now do you have to revalue precious metals to all of the debt that's out there? I just don't think we have a path from where we're at to anywhere sensible. I don't think there's even a rocky road. There's no road. There is no route. Now, for individuals, yes. But for countries, no. There is no route to get out of this inflationary trap.
Over the past 3 years, gold prices have surged by approximately 60%, with a notable 30% increase in 2024 alone. Many analysts believe this upward trend will likely continue, driven by persistent inflation and geopolitical instability. Amid this gold rush, some experts are speculating whether these market movements could signal an eventual revaluation of gold. Meanwhile, the U.S. debt and deficit crisis has worsened, with the budget shortfall surpassing $1 trillion in February, despite the fiscal year not reaching its halfway point. Financial expert Ian Everard has examined the figures, noting that the U.S. government is running a $6 billion daily deficit. With gold priced at approximately $93,000 per kilo, marking the nation's 9,000-ton gold reserves to market would yield an estimated $837 billion. However, Everard emphasizes that this sum would only sustain government spending for 140 days, less than 5 months, at the current deficit rate. In his view, this highlights the stark reality that even a substantial revaluation of gold would barely dent the nation's more profound fiscal challenges. A rare convergence of gold demand from both Eastern and Western economies fuels a significant rally in the precious metal. The value of U.S. gold reserves is about 2% of outstanding treasuries, compared to roughly 17% in the 1970s and close to 40% in the 1940s. According to Ian Everard, while gold serves as a reliable hedge against inflation for individuals, nations have no viable escape from the inflationary trap that has been set. He argues that this predicament wasn't something people consciously voted for, yet they have passively accepted it as long as their perceived wealth grew. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
So the market value of gold currently is around $93,000 a kilo. So if we revalued, say the US has got 9,000 tons, the math works out at $837 billion. If we mark to market the gold, let's put that in perspective. The US is running at a deficit of $6 billion a day and rising, and projected to rise further with the latest budget proposals are proposing 800 million savings and multi-trillion tax cuts. So every indication is for the next 3.5 years, the deficit is going to increase at a similar rate that it has in the last 8 years. So mark to market, $837 billion, divide that by 6, that would pay for 140 days of government deficit. Doesn't sound so significant then. So let's have a thought experiment. Let's 10x would be nice for us stackers. I think we'd all appreciate our gold having instantly 10 times the purchasing power. That still wouldn't take us to the end of the current president's term in deficit spending. If we revalued somehow, everybody in the world agreed gold is now worth 10 times as much, we still won't break even. So it's looking a bit irrelevant, isn't it, to me, how much gold the US has if we have the 9,000 tons? It's sort of, that would make a difference, not running, just breaking even for a year. But we're still left with a $37.5 trillion of accumulated debt plus interest, plus some people say 100, some people say $200 trillion of unfunded future promises, future liabilities. So we haven't got enough gold, even at 10 times, to really actually turn the ship round. Guys talk about, well, if we revalue gold to equal all of the currency. Well, it won't, because there's more debt than there is units of currencies. And now do you have to revalue precious metals to all of the debt that's out there? I just don't think we have a path from where we're at to anywhere sensible. I don't think there's even a rocky road. There's no road. There is no route. Now, for individuals, yes. But for countries, no. There is no route to get out of this inflationary trap that has been forced upon the Western world. I don't think people voted for it, although they've become complicit with it. Whilst people have appeared to prosper and their wealth has appeared to grow, they've gone along with the lie.
With silver holding strong technical support and gold providing a bullish backdrop, the near-term outlook remains favorable for further gains. A breakout above $33.39 could trigger an accelerated move toward $34.87, with downside risks appearing limited. If silver surpasses this level, it could pave the way for a push toward the October 2024 high of $34.87. While minor pullbacks may occur, Ian Everard believes silver will continue to find support around key levels. He notes that last year's rally to nearly $35, followed by a pullback to just below $30, signals the early stages of a more sustained upward trend. Let's now turn our attention to the video again.
I think there's several things going on. Personally, I think $32 in silver. When silver holds that as a floor and starts pushing up from there, and it might make some corrections, but it keeps coming back to 32. Now, we're early in that stage. We had the breakthrough last year to nearly 35, and we pulled back to just below 30, and now we're around 32 and a half. It's looking pretty stable. I think that will make a big difference. One, for new buyers, and two, for existing buyers who are on the sidelines waiting, hoping for a significant pullback. I think there's a high chance we won't get that this time round. I think more information is getting out. More people are actually inquiring, what is money? What is a store of? And then that figure we mentioned earlier, 2.5 ounces of above ground physical silver, that isn't actually all available. It's not available in retail form. A lot of it is in flatware, in vases, in jugs like that jug up there, in art. It's in private vaults. I've got clients who stack these up like us mortals stack firewood. They stack out by the cord. And this is designed to pass down to the grandchildren. So a lot of the above ground silver isn't actually available, and it's definitely not readily available in a retail friendly form. There's a finite capacity of the mints, and that's why historically we see great fluctuations in premiums. The premiums can go from $1 to $4 just on a generic 1 ounce round. But it doesn't cost the mint anymore, but they're just making $3,500 more per 1,000 ounces they put through their mint. That's just based on when demand exceeds supply. So it happens very quickly in the retail market. Yeah, I mean, generally I view silver as fractional gold. Now, it's at a variable ratio, but that ratio never breaks. One way to look at it is a really big, fat bungee rope, big, fat elastic rope. And you can stretch it out, but they're always connected and it will always pull back. I mean, 1980, we saw 15 to 1. The perceived ratio in the Earth's crust is 15, 16 to 1. The mine ratio is 8 to 1. The physical, ready, potentially available metal is 2.5 to 1. I think when people start realizing these ratios, silver is exceptionally good value. And we talked about ratios earlier. I am convinced that gold is very undervalued compared to the dollar, and silver is very undervalued compared to gold. And their estimate of above ground physical silver is 2.5 ounces per person on the planet compared to 1 ounce of gold. So that's a ratio of 2.5 to 1. So talking ratios, and we're around 89, 90 to 1 on the official gold silver ratio, whereas the physical availability is 2.5 to 1. So yeah, that's one thing I keep an eye on, ratios. I think they're more instructive in looking at dollar denominations, for a lot of aspects of commodities. You can see the comparison. What is most undervalued gives us a clue possibly where to best invest into.
Historically, gold has played a pivotal role in monetary policy, as seen in 1973 when the International Monetary Fund, IMF, supported raising its price to weaken the dollar, boost trade, and improve the nation's financial position. Since then, gold prices have risen significantly, especially during the latest surge. while the outdated statutory price of $42.22 per ounce remains little more than an accounting relic. Could gold revaluation be a realistic solution to the U.S. debt crisis, or is it merely symbolic? We value your thoughts, so please share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.